don't believe what you are reading in the news about oil, okay? And so you have to listen to what I'm saying to understand the future of the oil markets. It's not based upon fundamentals. It's purely based upon what they say the price is going to be, okay? Let's say you're a company that manufactures sprockets and you're on the stock market. It's based upon the news. Let's say that you've increased the amount of your clients and you're selling even more sprockets. So the value of your stock is going to naturally go up, okay? Now, the stock does not determine the price of your sprocket, but it does determine the value of your company. Nobody controls the price that you sell your sprocket for, okay? And in that kind of model, you could really prosper even if the markets crash. Let's say the markets crash like the financial crisis of 2008, 2009, and your stock price crashes down to half. Well, your sprocket price and the demand is still there, and you're not losing that revenue, but your stock price is lower. Now, look at oil, okay? Oil is a global commodity, and Saudi Arabia, OPEC, Russia, Iran, America, all these countries produce oil. But the price of that oil is based upon what the stock price is, the future price, okay? West Texas Intermediate, controlled by the New York Stock Exchange, and Brink crude, controlled by the Intercontinental Exchange, okay? Both of those represent about 80% of the oil bought and sold in the world, okay? So 80% of the world's oil supply is controlled by the stock market, okay? It's not controlled by the individuals that sell it. So imagine you're that sprocket guy, and the market, big companies, big corporations like State Street, BlackRock, and Vanguard are controlling the price of the sprocket that you made, that they didn't make. This is your product, and it's being bought and sold, priced based upon people that hate sprockets. Imagine companies that control the price of your sprocket hate sprockets. They hate them. BlackRock hates oil. They're an ESG submissive company along with all these other companies. I mean, they went from 150 million volume trades for oil in 2015 to 1.3 billion volume trades for oil in today's market. That is a lot of large corporation taking total control. I mean, let's say Iran drops a bomb in Israel tomorrow, okay? In the past, during the days of Bush, oil would go up to $200 a barrel. Today, BlackRock, State Street, and Vanguard come together and say, hey, we're going to short the oil stock. Let's sell it. And they sell it. And all of a sudden, there's negative sentiment when oil prices should be higher. Today's oil price is embarrassing. If you look at what's happening with the Houthi rebels bombing those ships, those oil ships that are going through the canal, with everything that's happening in Russia, in Ukraine, in Iran, in Iraq, in Syria, in Israel, the Houthi rebels, Lebanon, Hezbollah, everything that's happening, and oil prices are hanging out around, if you look at this news here, hanging out around $69 a barrel. That's insane, okay? And you look at this news, okay? CITI reiterates $60 oil price forecast amid bearish trend, okay? So people are seeing these headlines, and it's going in their brain, oh, yeah, oil's going to crash, okay? But you don't go in and read here, we could see $60 per barrel oil prices next year if OPEC Plus fails to implement it. So they're basically saying, hey, look, guys, I don't know where oil's going to go, but it could fall if OPEC fails to implement. I mean, look, there's a lot of potential, but the chances is very low, okay? And if you look at oil prices, this is a chart from 2003 to 2024, okay? Now, oil prices, now this is based on inflation. I think the highest oil prices in 2008 got to be $140 a barrel. But you add inflation, oil hit $200 per barrel, okay, in 2008. And then it crashed down to $62 a barrel during the worst financial crisis the world has ever seen. And Citigroup is saying, hey, if OPEC doesn't get it together 2025, oil might crash to 60. Are you kidding me right now? During the worst financial collapse the world has ever seen. Now, they've done a lot to improve the financial system and structure, and there's a lot more volume trades, okay? There's more sophisticated people controlling the markets today than it was then, okay? They are not over-leveraging themselves for bunk mortgage bonds like they did back then. It was total garbage. It was 100% fraud back then. You need to watch the Big Short to understand what I'm talking about. I recommend your homework today. Watch the movie called The Big Short. You'll understand that debacle, what happened in 2008. So back to what I'm saying, okay? During the worst financial crisis the world has ever seen, oil crashed to $60-something per barrel. We're in the middle of a Middle East war. Oil demand is at the highest it's ever been, okay? So if you look at this chart here, in 2008, the demand was 85.9 million barrels a day. Production was 86.6 million barrels a day. That's a difference of 700,000 barrels of oil, okay? So back in 2008, we had a deficit of 700,000 barrels of oil, okay? 2010, demand was 87 million barrels a day, and the production was 87.2 million, okay? 2012, 90 million. 2014, 93. 2016, 90, almost 95. 2018, 96. Fast forward to 2024, our demand is 104 million barrel a day, and we have a deficit of 3.5 million barrels a day. Our SPR is the lowest it's been since the 80s. We're in the middle of some crazy potential Middle Eastern war breaking out like we've never seen before. The emerging markets, the demand for oil in the emerging markets is growing. Okay, look at this Excel spreadsheet. This is an OPEC spreadsheet, which I trust OPEC more than anyone to calculate numbers. Okay, all right. So this is total world oil demand. In 2023, world oil demand was 102 million barrel a day. In 2024, third quarter, 104 million barrel a day demand. Fourth quarter, 105.6 million barrel a day demand. And they're saying by quarter of 2025, the demand will be 107 million barrels a day. How in the world do you expect us to fulfill that demand if we continue down this path where there's underinvestment and negative sentiment towards oil? Because here's the thing, when you control the oil markets, when you're controlling the price of those sprockets, let's say the sprocket company that produces these sprockets, in 2008, he could produce these sprockets for $20 a sprocket, and he sold them for $100 a sprocket. So it's an $80 profit. Well, add inflation, add the COVID-19 issues. Now those same sprockets cost $80 a sprocket. And now he's only making $20 per sprocket. But now add the fact that the market controls the price of that sprocket, kind of like how the market controls the price of oil. And now the market's demanding that he sells that sprocket for $70 a sprocket. Now he's losing $10 per sprocket. How does that model even work? Now, Sean, the oil companies are making record profits, okay? You got to understand that shale oil and gas is America's biggest producer. Initial production rates in 2012 for shale production. Now, I talk about shale because it's the biggest producing asset in the U.S., okay? Most major oil companies. Now, I don't produce in shale. I focus on conventional. Okay, if you want to understand the difference between conventional and shale, please talk to me. But we're talking about shale, which is when Trump says drill baby drill. This is what he's talking about. Okay, in 2012, the average shale production rate was 500 barrels a day. Okay, 2014, 700 barrels a day. 2016, 1,000 barrels of oil a day. 2020, 1,400, and 2024, 1,800 barrels a day. Okay, so you would assume that we're producing more oil per well. Well, that's true on paper. Now, first year decline rates. In 2012, shale well, the decline rate was 65%. So if a well is producing 1,000 barrels a day, by the end of the year, it's lost 650 barrels a day of production, okay? Dropping down to 450, okay? 2014, the decline rate was 70%. 2016, 75%. 2020, 82%. And 2024, 85%, okay? So now if you take a decline, if a well is producing 500 barrels a day and it declines 65% versus a well coming online at 1,800 barrels a day and declining to 85%, by the end of the year, it's producing about the same amount of oil. So, but here's the difference. To get that well to produce 1,800 barrels a day, they had to tap into much more structure. Back then, they were going sideways maybe a mile. Now they're going miles and much larger stage fracs, multi-stage fracs. And so what they're doing is they're tapping into a much larger pool, extracting much more oil initially, but it declining to the same rates as 2012. So here's my point. They're tapping into much larger structures. That means they're producing more fields much faster, and they are declining to the same level by the end of the year. Okay? So imagine if you understand this, you understand why we're seeing these large volumes of oil production coming out of the Permian, coming out of the Bakken, coming out of America. Initially, on paper, it looks like we're producing a lot more oil, but the decline is much faster. They're producing less oil, and the decline rate is 85%. Okay, so Sean, what the heck are you talking about? What does that mean? Here's my point. Today's wells look really good on paper. Today, we're producing upwards of 13 million barrels a day. But if we don't keep drilling a lot of wells, that number is going to drop very quickly. You cannot. It's kind of like having a credit card and spending more money with a higher interest rate. You can't keep up with this. It's impossible. Okay. Now add in the fact that oil prices are at $70 a barrel. See, it costs more money to develop because of inflation. What they're telling you, see, you have to understand something. The shell companies aren't going to come out and say, hey, listen, guys, it's not profitable to produce like this, okay? The shell wells, the break even on a shell well, if you go buy the lease, you could go pay the drilling costs, the completion costs, the maintenance fees, everything. The payback is like 3 years, 3 to 4 years. And then after that, it's such a quick decline that it's going to take you another 10 years to have another payback of your capital. It's not worth it. So you throw it on a stock like Chevron, British Petroleum, you take that same scenario and it's a stock. And so now there's value to it. You got the stock multiplier there. Okay. So they could hide the fact that it's less profitable today. I don't have those numbers because shell companies aren't going to come out and say, hey guys, it's very unprofitable. It would cause their stock price to drop. And the left, they don't want, if they came out and told the truth about shale, it would decline. It would increase the positive sentiment about oil. Be like, oh my God, there's scarcity out there. See, everyone has such a faith in shale that they think oil isn't scarce. You know, during the times of George W. Bush, we were producing about 5 million barrels a day, and we were running out of places to develop. And then we discovered shale. In 2012, we went from 6 million barrels a day output, 5 million something, to 13 million overnight. Okay, thanks to shale. But people don't understand that shale is a sprint. It's not a jog. We're producing a lot of oil, yes, but we can't do this much longer. And oil demand continues to grow. And so it benefits shale not to be honest, shale companies not to be honest about shale. It benefits the left not to be honest about shale because they're just like, hey, we got shale. We got plenty of oil, guys. Green energy is working. So it keeps oil prices low. It benefits BlackRock, State Street, and Vanguard, those the largest corporations in America that control trillions of dollars of assets. It benefits them to keep oil prices low, which they cornered the market. They cornered the market. They control the price of a barrel of crude. So it benefits them as well. It also benefits the right. The right is like drill, baby, drill. We have plenty of oil in America. We need to allow our American oil workers to go to work to get gas prices low. See, every person I've ever spoken to about oil, they think that Trump in office could actually reduce the price of a barrel of crude, getting gas prices down. The only reason why oil prices dropped was because we spent billions and billions of dollars on U.S. shale. We have a printing press that we could print as much money as we want. And we printed and we drilled. But shale oil is the most expensive barrel of oil to produce. It's not economically feasible. And because of the stock market, they've been able to make it valuable. If you didn't have a stock market and it was purely based upon dollars in and dollars out, if I spend 20 million on this well and I get back 20 million in 2 years, that's not a bad investment. But if I get back 20 million in 4 years and every 4 wells that I drill is a loser, and then after that 4 years, I don't get back another return for another 10, that's not a good investment. And the payback is getting slower as time goes on, as inflation gets worse, as oil prices go up. It could be worse than that, guys. I don't know. Nobody's being honest about it. Everyone's afraid to be honest. So here's the deal. Here's what I'm telling you. BRICS is the answer to controlling, they control 45% of the world's oil supply, yet their oil is priced by anti-oil people. Imagine making sprockets, but another country prices them for you. BRICS is getting ready to come together in a way to cut the West off from oil. Say, hey, listen, your stock market has priced our oil at $70 a barrel. But fundamentally, oil should be around $100 a barrel, $120 a barrel. We think that because of the supply and demand and because of a decline of U.S. shale oil and gas and because of the potential of Middle East war, I think oil should be $120 a barrel. So if you want our oil, you're going to pay this amount of money. And they have no choice but to pay the price. Otherwise, there's just not going to be enough oil. Well, Sean, we've got plenty of oil in America. Okay, let's say we do. Let's say that the shale revolution continues, which is not, but let's say it does. Okay, we have to import 6 million barrels a day. 6 million. And our oil demand is 20 million barrels a day. Okay, and we're producing 13 million barrels a day. All right, so think about it. Where's the 7 million barrels a day coming from? You think about that for a second. And we're exporting 4 million barrels a day? You look at American oil demand, okay? Our oil demand, third quarter of 2024, is 20.7 million barrels a day, okay? Oil output, okay? Our oil demand is 20 million barrels a day. And total in our oil production in America is 13 million barrels a day, okay? That means that's a deficit of 7 million barrels a day. But keep in mind, we export about 4 million barrels of oil a day, okay? That's a deficit of 11 million barrels a day. That means we rely upon 11 million barrels a day. Now, Sean, why would we export 4 million barrels a day? It's really simple. Shale oil and gas is a light sweet crude. Our refineries, most of our refineries are not set up for light sweet crude, so we have to export it. We have to send it to other countries that are willing to buy it, that can, okay? Who cares what they do with it? We need to get rid of it. And then we import heavy crude. That's why we needed that Keystone pipeline to import the heavy crude from the Canadian tar sands. The reason why our infrastructure is set up for heavy crude is because Saudi crude is heavy, and we made that deal with Saudi Arabia. And most of our oil came from the Saudis. And so we have to, because of regulations, because who's willing to put 20 to 30 to 40 billion dollars at risk to be able to refine all of the shale oil that we produce, knowing that it just takes one regulation to stop them from building it. Nobody's willing to take that risk. It's just unbelievable. If our system was smart, we would start building an infrastructure where we could refine our own crude and use our natural gas for cars and vehicles and power homes. It's unbelievable. We have such an abundance of natural gas, but natural gas prices crashed. And that's another issue we're having. The infrastructure is maxed out for natural gas, especially in Texas. So there's a lot of Texas wells that can't even produce because our natural gas infrastructure is so overly saturated that an oil well has to shut down because you can't just say, hey, we're just going to produce oil and not the gas. You got to produce both at the same time. So in the past, they would flare it, but they can't flare it anymore because thanks to the hall monitors of the oil and gas industry, satellites that are telling on these oil companies for flaring, and then they're getting a huge fee in the mail. So it's easier just to shut it down. And natural gas, you got to run a gas line all the way to the refinery in order to produce, because you can't truck it. And it's not economically feasible to liquefy your natural gas. Guys, we have a problem here. We have to get our stuff together. A drill baby drill isn't going to work. Like I said before, the decline rates is 85%. And that's because the easy to get to oil, the premium oil from shale is been depleted. Now they have lesser quality reservoirs. And because of technology, they're able to extract more oil much faster, but the decline rates are much faster. And the accumulation, the total oil output volumes are lower. And there's a decline in capital being spent on oil. And the green energy is a lie. It's not working the way that the left is saying. So I'm here to tell you, it's going to be a rough road for those that aren't profiting from oil. Saudi Arabia is sitting in a very good position as long as they as long as they could protect their assets. I mean, imagine being a country next to Iran, next to the Houthi rebels. I mean, Iran is upset with Saudi Arabia because they're not on the side of Iran when it comes to geopolitical issues with Israel. Saudi Arabia is allowing airspace to be used to attack the Houthi rebels. And you have to understand something, although they have different religions, even though that they serve the same God, but they have a very strong difference in their ideas as far as religion. And that's why the Houthi rebels in 2019 dropped bombs on Saudi oil facilities. So Saudi Arabia has to be careful about who they partner with in the future, okay? Are they siding with Russia, Iran, the Middle East? Because there's a lot of countries that are coming together in the Middle East that hate Israel and that hate America. They call Iran and many others call Israel the little Satan and America the big Satan. If Iran could and had the power, they would bomb America and Israel today. But they're playing it safe. They're being careful. And they know who takes the side of America. They know who takes the side of Israel. If they could, they would take out everyone that took out Israel. They're calling their brothers to cut oil off from Israel and anyone else that supports Israel. Kind of like on the Yom Kippur War when they cut off oil from America. Oil prices went up very high. Well, BRICS has no choice. They're tired of their oil being priced by anti-oil companies. They're tired of their oil price being controlled. They're tired of being sanctioned by the West, by America. They're tired of being controlled by the United Nations. They're tired of being told what to do by countries that hate oil, that treat them as if they are the cancer of the world. They are the red-headed stepchild of the world, and they're tired of it. And their attitude is, okay, you've demonized our oil. If you don't want it, then we're going to stop sending it to you. And when that happens, we're going to see a price of a barrel of crude like you've never seen before. The days of Bush prices, oil going up to $200 a barrel, very possible. Iran wants it. Russia wants it. Saudi Arabia hasn't admitted to this, but they do. Saudi Arabia has very ambitious plans for his country. He can't do it without $100 oil. Russia can't survive this war without $100 oil. Iran, they want $100 oil. So everyone that controls the wars in the Middle East that has the ability to cut the West off from oil wants $100 oil. And they're tired of the control of the left. They're tired of Western politics controlling everything. And they want to see the great Satan pay and suffer. And the only way to do that is with oil, because they can't do it with bombs. If they were to attack America, they would cease to exist. We have the most powerful country in the world. We have nukes. We have weapons that they have never dreamt of having. And contrary to popular belief, we are still the greatest force to be reckoned with. There is a decline on the respect of America. World respect for America has declined substantially, causing the dollar to decline, the demand for the dollar to decline, the American economy to decline. And I think what you're seeing is first started out with the BRICS, China and Russia and Saudi Arabia disconnecting from the U.S. dollar and using their own currencies to buy and sell commodities like oil. And that was the beginning of the end for the U.S. dollar. America's on the decline. I truly believe that if you're not thinking globally, what can I sell that's needed amongst global countries? Because, for instance, India, their GDP growth is 6.8% this year, where ours, they say it's 1.5%. I think it's negative. Saudi Arabia became very rich. Dubai, if you've ever gone to their countries, you see airports, you see buildings that are beyond what you've seen in New York or any other country. Why? Because they had a product that was needed during the golden age, while America grew like no other country in the world. We grew at a rate that no one has ever grown. And they supplied the commodity, oil, to the growing nations and making them very rich. And so now the West has gone through the golden age, so they're not going to grow that much more anymore. The growth has stopped. Well, now that was 1.4 billion people. Now there's another 6 billion that want to grow. So Saudi Arabia is going to provide their needs. That's why he's hooked up with China and India. He's supplying. It's insulating them from an American decline. The way you insulate yourself from a decline in America is by selling something that's needed to the emerging markets. The future is the emerging markets. If you could provide something to the emerging markets, you're going to be a winner during the slow death of the American economy. I don't think it's going to happen overnight. I don't think it's going to be a massive crash. I mean, it could be. That could happen. But I'm telling you, Sean, if the American economy just crashed overnight, oil prices would crash with it. For a moment, yes, oil prices would crash. But if oil prices crash, the American oil industry would be crushed, especially shale oil and gas, because the stock market is what pays for everything for these big shale companies. Now, the small mom and pop oil companies, I think they'd be okay, especially if you're in conventional, because conventional oil is profitable at much lower price than shale. Break-even price is far lower, much lower. And so if that happened, if the markets completely crashed, every oil company on the public stock exchange would be destroyed. There'd be a massive amount of layoff. Chevron couldn't drill anymore. British Petroleum couldn't drill anymore. You would have a massive layoff. And then oil demand might drop 30 million barrels a day. Let's say something crazy. Our demand is back to 2008 levels. But the oil output would drop along with it. American oil output would drop. Worldwide oil output would drop substantially, breaking the backs of every single shale company that has ever existed. And those companies would never come back. And so then oil prices, just like oil prices taking 6 months to go from $60 a barrel in 2009, when the largest financial crisis the world's ever seen, and 6 months later, it's back to $100 oil. I truly believe oil prices would be broken off from the left system, from the woke system of stock market manipulation, and it will be broken, and then it'll be purely based upon fundamentals. Because if you think about it, oil prices today should be around $150 a barrel. I mean, gold prices hit all-time highs. Why? Because of inflation. Inflation. Simply, we're printing too many dollars. So gold prices go up. Oil is a commodity. You trade dollars for gold, you trade dollars for oil. The difference is gold you put in your vault, where oil you put in your car and it's gone. It'll never come back, and you got to produce more. So SPR is the lowest it's been in years. The strategic petroleum reserves of oil is the lowest it's been in years globally, because we're using more oil than what we're producing. If oil matched demand, if oil output matched demand, if supply and demand were equal, our strategic petroleum reserves would not be declining. If we were producing more oil than demand, if supply was higher than demand, our strategic petroleum reserves would be increasing. They have declined. They've been declining. Yet oil prices are $70-something a barrel. I smell a fish. The system's broken, guys. It's fraudulent. The oil market is fraudulent. I've said it. The oil market is defrauding the world. It's the biggest weapon that they have against the Middle East. If they allowed oil prices go to where they should, Iran and Saudi Arabia and Russia and the Middle East would become very wealthy, and America would decline much faster. It would erode the middle class, it would erode the US dollar, and it would reduce the power of the West. So this system is about to break, guys. It's going to break. It has to break. It can't last like this. Shale oil and gas was the last leg that oil had to keep oil prices down. And we went from shale is declining, and the capital to capitalize shale is declining. They can't keep controlling the price of a barrel of crude. Oil should be around $100-something a barrel to keep up with inflation, to keep up with the cost, but it's not. How long can shale, the most expensive barrel of oil to produce in the world, how long can they maintain this facade? And how long can they continue to manipulate oil prices, to sell it as oil prices go up, to short the hell out of it? There's 1.3 billion volume trades when there was a time in 2015 that there was only 150 million. That's a lot of manipulation. I'd much rather have small investment firms and individuals investing in the stock market for oil because they're honest, versus these large corporate greedy bastards that only care about numbers, that use algorithms, that use AI to not just control oil prices for the sake of oil. They're not just looking at oil. They're looking at everything, every commodity, every business, every asset class. They're looking at real estate. They're looking at the globe. They're looking at everything. And they know that oil is the only commodity that could crater every single stock, because oil impacts and affects everything. It's the biggest driver for inflation, the biggest driver for the cost of goods and services to go up. If they could control this one commodity, they can control the world. I'm telling you right now, BRICS is tired of this. They are laser focused on getting control of their oil price. They control 45% of the global oil output, and they are going to price it, and they're not going to budge. They have to come together. If Saudi Arabia and Russia decided to compete, then you can't control the price of a barrel of crude. If Saudi Arabia sells oil for $70 a barrel to America, where Russia wants to sell it for 100, that doesn't work. Nobody's going to buy it for $100 a barrel. But if BRICS, if every single BRICS nation, every single OPEC nation comes together, Saudi Arabia, Russia, UAE, Africa, Venezuela, Iran, all of these countries say, hey, listen, our 45 million barrels of oil is going to be sold for $100. Take it or leave it. Well, the market says, BlackRock, State Street, and Vanguard, and New York Stock Exchange, and the Intercontinental Exchange says that that oil should be $70 a barrel. Why are you selling at 100? Look, if you want our oil, this is the fundamental price it should be. If you want our oil, take it or leave it. And so they're going to be forced to buy it at $100 a barrel. And then it's going to cause sentiment to change. Now, all of a sudden, the news agencies, the statistics that you see on the internet about oil, the fundamentals that you see about oil controlled by the West, Fox News and CNN and all these news analysts that are controlling the price of oil, these large banks and these large investment firms that make these oil price predictions. $60 oil if OPEC doesn't get it together. I mean, that's like saying, hey, if the world comes to an end, if Jesus comes today, oil is going to go to $300 a barrel. I mean, I could play that same game. We could just say whatever we want to say, And I'm not knocking Jesus, by the way. I believe in him. But if you don't listen to the news and stop believing the lies about oil, if we stay in this price environment that oil prices continue to maintain, how long can Shale continue to develop underneath this low price? How long can the world continue to keep finding new oil and keep drilling when they know it's being manipulated? There are countries that can't afford to develop at these prices. Shale oil is on the brink of not being able to be profitable at these prices. As inflation gets worse, as it becomes more expensive to drill, as their assets are depleted, as they have to go after lesser assets. I mean, the easy to get to shale oil is gone, depleted. Now they're in tier 2 assets. They're moving more towards tier 3 assets. It's getting worse. The costs, yes, they've been able to produce more oil because of technology, but they're sprinting with that. It's a facade. It looks good on paper. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. If you have anything to add to this, please comment below. I'd love to hear what you think about it. All right, guys, we'll talk soon. Thanks.